How about Perrigo? That's just right at the low end of the range, almost.
The reason why they lowered guidance by 5 cents was the euro exposure. That's been quite weak. I think they've taken that down now for where it needs to be. Remember, like, you can't sort of forward hedge your currency exposure if you haven't bought the European business, which is what they did. You know, if they operated right, you would have forward hedged the profits going forward. So they weren't able to do that until it closed. So I think that's, like, you never want to see them have to lower guidance, but the underlying trends and everything they could control improved, right? Everything from baby formula to cough cold. I think they're set up for a very strong cough cold season coming up.
We're going to go back into, like, you know, the rest of human history where people actually do get colds and the flu, and you'll go to the drugstore and you'll pay Perrigo. So I just think that's, and drugstores anyway, in our slide deck will show, or that type of activity, that type of purchase in a quad 4 recession is top of the pile in terms of, you know, a dumpster pile, to be clear, where people are not spending on a lot of things that they used to when it wasn't a recession, and that's where you want to be. So this stock didn't just come down because, you know, it's a guide. It's something that they hadn't guided to, I guess, but the stock was also coming off like 52-week highs. It's not like it was down into the print.
It was performing well just until that the earnings report. And remember, it's store label in the drugstores. This is the cheapest thing you can get in those stores. So you have that big positive there. You have some new drug announcements right next year, and then you know, I think the trade down effect is really happening. You're seeing that across all my companies that they're starting to talk about private label, store labels creeping into the substitution now. The consumer's under pressure, you know, so that is happening.
You know, you go from Flonase to the CVS, you know, equivalent brand. It's like there's no difference. It's just cheaper.
Almost anything you're buying in a drugstore or grocery store that's like the Walgreens brand, the CVS brand, that's made by Perrigo.
This is such an easy one to understand. I mean, why wasn't this one of the great ideas of all the masters of the hedge fund stock picking universe? I mean, I guess they didn't know we were going into recession is point number one. This is what I wrote in the early look. I'm like, look, think about it. Hedgeye is the most immediate term because we're here for the people every day, all day. But we're the best on the intermediate to long-term pictures. You know, like Sweet Greens could be a 0 or whatever it is. Perrigo within the lens of the quads. I mean, this is a much higher level that we're playing the game than most people. You know, God forbid you're still watching CNBC looking for stock picks, or that you're at a hedge fund where you're a bit of a dinosaur now.
That could be one reason if they're macro unaware. And reason number 2 was they fired their sell side coverage. Right, they moved from being covered by healthcare analysts to consumer staples analysts, but no consumer staples analysts picked it up, so it was lost in coverage in this time frame as well. So there's no one to sort of tell people about it. So when I talk to consumer staples analysts, they haven't heard of this before.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.